Good morning, everyone, and happy Thursday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. All right, guys, welcome back, and thank you all so much for being here. This morning, we have a ton of exciting stock market news and notable earnings reports to cover. Plus, we'll take a look at which stocks are the morning's biggest gainers and losers. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well so you can stay up to date with all of our latest videos. All right, let's jump right into this morning's exciting stock market news. U.S. stock futures are in the red this morning. Currently, the Dow futures are down 0.3%, S&P 500 futures are down 0.28%, while NASDAQ futures are down 0.22%. PayPal plans to acquire digital pinboard site Pinterest for $45 billion. The proposed $45 billion deal would be the biggest acquisition of a social media company, surpassing the $26.2 billion that Microsoft had paid for LinkedIn back in 2016. It's reported that a deal could be announced as early as November 8th. The acquisition should allow PayPal to merge financial technology with social media and e-commerce. It comes at a time when online shoppers are increasingly buying items they see on social networks, where Pinterest is a big player. Analysts rate the PayPal stock a strong buy with an average upside of 30%. Walgreens Boots Alliance is teaming up with Google's drone delivery unit, Wing, to enable drone delivery services in densely populated areas across the U.S. Wing will stage delivery drones at the retailer's locations to fly packages to customers. The drone delivery service should allow Walgreens stores across the country to deploy small, dedicated fleets from parking lots, rooftops, and small spaces to deliver packages. By leveraging these drones, Walgreens becomes the first retailer to launch such an approach for delivering items to customers. The Walgreens stock is currently rated a hold with an average upside of 13%. Micron Technology plans on spending $150 billion in memory manufacturing and R&D across the globe over the next 10 years. The company plans to invest $7 billion to build a new production facility at its Hiroshima factory. The new unit will manufacture DRAM chips from 2024. Micron is also thinking of investing in a new memory plant in the U.S. It is seeking to secure subsidies from the federal government and state governments to offset higher costs. Analysts rate their stock a moderate buy with an average upside of 43%. Raymond James has signed a deal to acquire bank holding company TriState Capital Holdings in a deal worth $1.1 billion. Under the agreement, common stockholders of TriState Capital will get 0.25 shares of Raymond James and $6 in cash per share. Following the completion of the acquisition, which is expected to happen next year, TriState Capital will operate as an independent chartered bank subsidiary of Raymond James. The transaction is likely to be accretive to Raymond James' earnings per share from the first year after completion. The company further expects more than 8% accretion to earnings per share after the third year. Their stock is rated a strong buy with an average upside of 12%. Audio content and entertainment company Odyssey has signed an agreement that will give them perpetual and exclusive access to Wide Orbit's digital audio streaming technology. Wide Orbit is a cloud-based distribution and monetization platform for live and on-demand audio streams. With this buyout, Odyssey will be able to better control its product portfolio and offer enhanced streaming features to its millions of customers. Post the buyout, Odyssey will operate WO streaming under the name Amperwave. With only one analyst rating, the Odyssey stock does come in as a moderate buy with an average upside of 55%. Now moving over to notable earnings reports. In the pre-market this morning, we're still waiting to hear from Southwest and American Airlines, and in the after hours, we're going to hear from Snap, Intel, and Chipotle Mexican Grill. Last night, we had a very highly anticipated earnings report from Tesla, who did come in with robust earnings and revenues for their third quarter, but their shares have slipped slightly following the release. The company reported earnings of $1.86 per share. This was up a whopping 145% year over year and significantly beat analyst estimates of $1.58. Their total revenue came in at $13.76 billion, an increase of 57% compared to the year-ago period, and also surpassing Street's estimates of $13.62 billion. Tesla sold a record 241,391 vehicles in the third quarter, reflecting a 73% year-over-year growth. Always a mixed bag with analysts, the Tesla stock is rated a hold with an average downside. Some of the most recent ratings from yesterday come in as a sell with no price target to a buy rating with a 38% upside. Just this morning, we heard from AT&T, whose earnings did come in ahead of analyst expectations. Their adjusted third quarter earnings were 87 cents per share, which was above estimates of 78 cents per share. Their revenue in the quarter came in at $39.9 billion, which was slightly below analyst forecasts of $40.6 billion. Their revenue fell 5.7% from a year earlier, reflecting the separation of the direct TV business. Analysts rate their stock a moderate buy with an average upside of 23.5%. Also beating earnings in their third quarter was International Business Machines, or IBM. The company reported adjusted earnings of $2.52 per share, beating analyst expectations of $2.50, but was down by 2.3% year over year. At the same time, their revenues rose slightly on a year-over-year basis to $17.6 billion, but did slightly miss analyst expectations of $17.77 billion. Analysts rate their stock a strong buy with an average upside of over 17%. And we also heard from Verizon Communications, who, like the others, also had a beat on earnings but slightly missed when it came to revenue. The company reported adjusted earnings of $1.41 per share in their third quarter, which beat analyst expectations of $1.36 and was also an increase to the $1.25 recorded last year. At the same time, their adjusted operating revenue rose 5.5% year over year to $32.9 billion, but missed the consensus estimates of $33.2 billion. Analysts rate their stock a moderate buy with an average upside of 12%. Now let's take a look at which stocks are this morning's biggest gainers and losers. Our biggest gainers this morning are led by Crocs. Under the ticker CROX, they're currently up over 9%, followed by Valneva under VALN, up 8.3%, and Roivant Sciences under ROIV, up 7.8%. Our biggest losers this morning are led by ABB. Under the ticker ABB, they're currently down 6.8%, followed by Technic FMC under FTI, down 6%, and Raymond James Financial, down 4.4%. So that is going to be everything for Thursday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, make sure you hit that thumbs up button and say good morning in the comments down below. I always love hearing from you guys. Thank you all so much for watching. I hope you have a fantastic day, and I will see you back here next time.